Happy Sunday, ladies and gentlemen. It is Brendan from Market Makers. This is your weekly kickoff for the marketplace. Guys, we need to talk about Bitcoin, got to talk about the equities, but the title of this video is The Trap Has Been Set. What trap am I talking about? The bull trap. Now, I want to explain something to you here, right? Simple concepts. Remember, half of trading is psychology. You hear Dow talk about this, Gann talk about this, Wyckoff talk about this. The most successful traders, the forefathers of TA, the founders of TA, all said, ignore the media, ignore the experts, myself included, and go with the technical analysis. Now, there's a reason for that. Because the media is wrong all the time. The media often has a narrative, and the so-called experts are usually biased. You see it in the news, right? So let's talk about how this trap has been set. Look at the media first. Let's start off with equities. Tom Lee, if any of you are in America and you watch CNBC, Tom Lee from Fundstrat. The same Tom Lee that last year got trouted out there on CNBC, said Bitcoin was going to 200K last year. In December of 2021, he said this would be a record-breaking year for the equities markets. In January, when the S&P finally started to pull back from its all-time high, Tom Lee said this is an excellent entry for stocks. Had you listened to Tom Lee, you would have been down, 70% in Bitcoin? You would have been down 33% in the NASDAQ had you bought in January. And now Tom Lee is saying the bottom is in. The perma bulls are coming out in force. They're all basing this on a Fed pivot. And if you pivot to crypto, Four Flies within the last week or so has a thumbnail, 80 plus K Bitcoin. Look at this pattern. You see it with Crypto. You see it with the perma bulls, Carl the Moon. Oftentimes they're showing their positions, some of which have already been liquidated. Guys, this is what you want. Unfortunately, in this business, there are winners and losers when you trade. The winners are going to take from the losers. As retail, we don't want to take from each other necessarily, but guys, this is money. This is how we find financial freedom. This is how I make a living. So you have to understand the market cycle that we are in. And when you are in a bottom, a true bottom, there is no hope. There is blood in the streets. Again, part of the advantage of having traded the equities bubble back in 2000, working at an investment bank in 2008. If you watched the movie The Big Short, I saw it firsthand. Some of these guys that some of you may follow on YouTube, social media, whatnot, were not even born yet. Okay, they weren't even breastfeeding yet. So understand, so when you look at people that are successful, and I'm not talking about myself, guys, although I have retired early and I do this full time, I'm talking about real success. I'm talking about Ray Dalio, one of the wealthiest people in the world. I think his net worth is over 24 billion, the largest hedge fund in the world. He has over 10 billion in shorts on the market just in Europe because by law he has to disclose them. 10 billion. You look at Michael Burry, they made a movie about him. You look at Jeremy Grantham, who successfully traded all of the major bubbles, including the 1989 bubble in Japan, billionaire. These guys are all saying the same thing. So it's not about choosing sides, okay? It's not about being a bull or a bear. It's about understanding the reality of the marketplace that you're trading in. Because if you watch YouTube and you watch some of these people, everything's just bullish all the time. Every time Bitcoin looks like it's rebounding, I got to show some patterns, get some clicks on my YouTube because I want people to see 70K, 80K, 100K. I saw a debate between Tone Vays and Peter Schiff. Now, Peter Schiff is no friend to the crypto community, excellent economist, very smart on inflation. And Tone said something very interesting. He said, I'm bullish on equities and I'm bullish on Bitcoin. Of course he is. Of course he is. This is what you want. This is actually a good thing. If you are a contrarian, if you understand the macro market cycles, then you understand that you need these people to be bullish because the bull trap is where everybody gets milked. So we're going to look at the potential upside. You guys already know what you have to do to actually be bullish in these markets. Now the equities are not even in a bear market anymore. The S&P is only down 13%. So it's not even down 20% anymore. anymore, but the trend is strong. Global tightening, global recession. This is the beginning of the recession, not the end of the recession. Things will get much worse before they get better. Okay? That's the premise that I am operating under. Doesn't have to be that way, but that is the premise of the reality of the world that I see around me. Let's jump into the TA. Guys, it's a great Sunday. It's a beautiful day here in Fort Myers, Florida. I hope you guys are enjoying your weekend. Let's look at my weekly Gann market pattern, the law of three market pattern. So you guys notice I made a change. Instead of having this way down here like we did here, when I was doing my sequencing, this was a 46% up move, the largest up move after making the all-time high. So I went ahead, this looks a lot better aesthetically, okay? So you have almost a 50% up move here. So this is your first wave, your impulse wave from the pandemic low down there, and then you have your second wave, your third wave, and then you have your A, your B, and your C correction. Now, this is what I want to talk about really quickly. I added some Gann time cycles in here, okay? So this is interesting. So this fib time gave us this June 13th date, which worked out beautifully, right? I showed you guys how I laid out the fib time before. And what I did here was I added some Gann time cycles coming from the all-time high, but also coming from this local high. So August 8th is off of this local high. It could be an important pivot. Now remember these candles, that candle is a 7-day candle, okay? So this is on the weekly chart. Didn't have a chance to do it on the daily chart yet. But I want to see how this next candle, if we do get any type of change in trend here on August 8th, and then these other dates here, September 19th, October 3rd, and October 31st, Halloween, right? So these are Gann significant days. Doesn't mean anything has to happen. These are just significant time cycle days from the all-time high, okay? So I'm gonna be watching all these. This day right here, September 5th, this is based off the fib time. This is the golden ratio 51618. We'll see if we get this final projection down. Again, guys, September and March are the boom and bust months in the normal market cycles. Black Friday happened in September. March of 2000, beginning of the dot-com bust. March of 09, the bottom of the great financial crisis. And of course, when did the pandemic happen? It happened in March. Natural law, guys. That's all it's all about. Let's go ahead and jump over to the daily. Starting off with Bitcoin. Guys, I added something different. I'm going to show you this matters more in the equities market, but this is time segmented volume. Because a lot of people keep asking about my VSA indicator here. Again, this is for trading with Wyckoff, showing the strength of the move. I recommend advanced volume from Fractal Trade 15 so you can see your buying and selling candles. This is showing the force of the move. Time segmented volume, this is a histogram. What time you can Google it, read about it, but what it does is it takes blocks of time, compares the volume bars, and then gives you a ratio here based on the parameters that you specify. It's another way to look at volume. I'm going to show you why I'm using it on the equities. Doesn't matter here as much on Bitcoin, okay? Because Bitcoin has had below average volume, but Bitcoin has been pretty steady here with what it's doing. So let's go ahead and look at this. What I want to focus on here, the money flow is hitting resistance here. It's above the median line, staying in the positive area. Got some type of double or triple bottom here, but you have the EMA cloud on top of you. And we did our wave projection, guys. Your 618, 24023 is really what you need to get on top of. Now remember, we always talk about making these cups, right, on top of Wyckoff. You want to get that cup, and that was your cup, and you got that move up, but you got a failed breakout, right? So the problem that you have whenever you have these Wyckoff trading ranges is if you get a failed breakout, you can make a new cup, which is your higher low, right? And then you want to come back up like this. If you don't make that higher low, all you are doing is this. If you don't make the higher low, you're just making a double top if you get another failed breakout. Okay, so you have to watch these moves all on top of this trading range. So you got to watch these moves at 618 at 24023. This is your 150 coming down right below 26,072. If you look at the 1414, 28292, 1618 at 29386. This is your 45 above you. And again, this is ascending, depends where you contact it, but right now it's in the 27K range, okay? So you want to watch this. You want to watch these numbers, and we'll see what Bitcoin does. As you guys know, it bears repeating because it is tight. It is tight. It is the volatility here in the range, guys. The tightest volatility that the caterpillar has ever displayed for Bitcoin, and it's right here in current trend. for the whole bull run. You've never had it this tight, okay? So this is going to be a move. And again, a short clearing move, a squeeze would look something like this. Up to key resistance, maybe the 45, maybe the 1 fib, or if you get super bullish, up to your 200, 233 at 33K. That would be an ultimate short clearing move and then a dump, okay? So that way you try to get the max pain trade, punching both the bulls and the bears in the faces, because the bears would have been shorting here, right? And the bulls are longing here. This gets them both. So we'll see how this plays out. Let's go ahead and look at Bitcoin on the 4-hour. Guys, looking at your Ichi here, I mean, look how beautifully you're just hugging this. You know, of note, your 233, your 150, your 200, these are all below you, okay? You can see that steady trend of higher lows that we've been talking about. This hasn't really changed since my last video on, what, Friday? This hasn't really changed much. You are bearish here still on the money flow. So you just want to keep a good eye out on this. Let me jump over to Ethereum. Ethereum, I went ahead and put these in my mini call ranges here, guys. When you're doing this, I'm looking at the resistance, okay? So we can take a wave projection here from the base of this breakout up to the back up here and then down to that swing low. And you can see the 618 at 1762. 618 at 1762 is basically your resistance. So what you want to do is you want to get your cup pattern either higher up here and come out and break out, or you come out, get on top of the 618 at 1762 and get your pullback, right? The Livermore pivot. That's what you want to do. And then you have your long-term moving averages right here, the 150 at 2,115 and your 233 at 2,232. So that's your potential move up, because guys, just like Bitcoin, I can show you this as well, just like Bitcoin, you are seeing the caterpillar extremely tight on Ethereum. You see this bottling up, and here's your long-term moving averages. So watch that move up and then down. Of course, this could always just slightly wave up and capitulate down as well. Below average volume as well, guys. Let's jump over to the S&P. Now, this is what I wanted to show you guys, okay? A couple of things here. This is the TSV. This is my VSA. Now, when you look at this, we have money flow right here. What I want to show you guys are these volume divergent rallies again, okay? Because lots of people are asking me questions. I know it's a difficult concept if you haven't studied volume or really trade it heavily with volume. Everything I pretty much do indicator-wise is going to be some type of metric with volume, okay? Very important metric. Volume doesn't lie, price often does, okay? Different ways you can say that maxim, but that's very true. Price can be manipulated, volume cannot. One thing I want to show you guys here, do you see this run up? So this is that volume divergent rally. I have this blue line on it, okay? If you look at your actual volume bar, like your actual volume bar, it was volume divergent because you have low, below average volume and smaller bars as price was ascending. Again, bearish divergence. Money flow, because this also takes price calculations into account, shows it going up. And of course, you got a nice overbought right here, right close to the peak on this candle. Now, what I wanted to show you guys was this block of volume. This is a histogram of time segmented volume. And if you look at this, you had breakout volume. You see your moving average here? You had breakout volume that quickly petered off. So your breakout volume, your biggest volume bar rate was right around here. So this was all volume divergent. You fell below your moving average and then quickly started falling back down, getting a bearish cross. But what you're missing, this is what I want to show you guys, and you can see this very clearly on the NASDAQ, because the NASDAQ was an outperformer. If you look at this current trend, so to get this big move up, guys, you got this big move up. This move is bigger, that's up, and you had, at least you had this spike up in the time segmented volume. Look at this move. Look at this move up. Let's go ahead and sequence these really quickly. Let's just do this so you can see, instead of just saying big move, let me give you a move. Now let's get this number here. So we go from here to 12% move. Okay, that 12% move still gave you above average volume, still got you up here above your moving average on the time segmented volume, okay? And then this move, let's go ahead and measure this, volume divergent move. This volume divergent move is 14%. So this volume divergent move is greater. And did you get anything like that? Look at the blue box here to my left. look at this volume versus this volume. This was volume divergent. This is extremely volume divergent. Do you see the difference here? At least you got some breakout volume to get the trend moving, okay, to get the trend moving. Now, if you look at it overall, it was lower volume, but when you segment it by time and compare relative blocks of time to each other with the price calculation that the time segmented volume does, or the volume calculation time segmented volume does with time, then you can get this type of narrowing down of how relative this is in that time block. But you didn't get anything over here, guys. Nothing. So again, volume divergent. This is why I believe these are bear market rallies that will fail. There's no participants here. This is low volume, paying higher prices for assets, driving the assets up, which are quickly approaching long-term peak resistance. Okay, that's what they're approaching right now, which is your 150, your 200, and your 233. 1618, kind of my max here for where this can go, this pump. If it got super bullish, you can come up to that 45 at 4400. I don't see that. I don't think you're going to get past the 1618 and the 200 descending. 150, 233, this quadrant right here. And again, you could very well start to change trend down here without even touching these. Although it's kind of like you got this far, I would expect some contact, right? I would expect some contact, and I do believe this will eventually come retrace. My two targets I'm looking at are basically that 30, you're going to retest your lows potentially around 3,600. If you lose that, I'm looking at us going down to about 3,100, 3,000, okay, which is a 45 angle, or 3,500, I'm sorry, is the weekly 200, 233. Then if you lose that, that's why I have this green line here, 3,508 is your weekly 200, 233. Then if you lose that, you're looking at that 3K number. All right, so that's what you're looking at once this fails. You got to hold your recent bottom, and I would fully expect a retest. Okay, I would fully expect a retest. Let me see if I have one here of your 50-day simple moving average, because this is a lot of basic TA guys at banks, at hedge funds, they use this moving average, 50 and the 200, okay? So you can see this right here, about 39.33. I would expect this initial pullback could bounce down back around here, about around the 50. If you lose that, then watch your previous June lows, okay? Look at these inflection points, but this volume divergent rally eventually will turn back around. NASDAQ, same thing, not going to belabor the point, but you had this nice volume divergent rally right here. And what did you do, guys? You made a double top. What did you do on a time segmented volume? Look at this. You actually had some breakout volume, above average volume, even though in real volume, you have nothing but lower, lower, lower. This is all volume divergent. And now if you look at the breakout for this move that you're on now, a 17% move, look at this compared to this previous move, and you still made a top and rolled over. You have no breakout volume. And again, here on the regular volume, well below average. About looks like maybe a third to half of what these bars were, and you got a bigger move up, currently impacting the 150, right shy of the 233, your 200 on top of you. Guys, if you're trading on SimpleFX, check out SimpleFX in the video description, up to a $5,000 bonus. We trade the equities, commodities, Forex there. Guys, take advantage of SimpleFX. This looks like an excellent short incoming. You do get a double bonus with our link. It's a special thing they do only with us. Nobody else offers that. And of course, you're going to trade those cryptos, guys. You're going to trade Bitcoin, check out BITGET, another great sponsor in the video description. Really do appreciate your support by supporting our sponsors. So guys, what I want to do here is let's go ahead and take a trend-based fib. And let's measure out this double bottom. Let's get this double bottom. And you can see the 1618, 13,438. And we did already come up. We came up to 13,360, so very close, whatever, within $70, $75 of the 1618, already hitting that 150. This is pretty much peak resistance. And if you look at your money flow here, you were making a triple top and right at resistance too, right? Classic classic bearish pattern. You trade it just like a double top, basically, but this is a triple top if this starts to roll back down. Again, August 8th is a potentially significant day, which is Monday on the Gann calendar. So let's see if that does anything. If we do start to have a change of trend here on August 8th and start to roll over in some of these marketplaces. Let me go ahead and draw this too, because I think I showed you guys this already. This is my chameleon vibration, my pattern that I created that lines up beautifully here. Just going to draw this guy out. Gives you the fib retracement levels. This comes right up on that 1618. Okay, right there. Guys, if you want to learn how to draw these patterns, if you want to learn how to use Wyckoff, Fibonacci, all that fun stuff, then definitely check out our Discord, the join button right underneath this video, Telegram for trading signals in the video description. I forgot to plug all of our stuff. I had a day off, so I forgot. Let's go ahead and move over to the Russell. I like this trade setup, guys. So if you guys are interested in trading this, obviously be careful. This is not financial advice, but this is something that I myself am looking at potentially trading here, okay? And then let's go ahead and look at the Russell. So guys, I showed you the Bitcoin sequencing. I want to show you the Russell really quickly, okay? Because the Russell, just like Bitcoin, 4 down moves, 4 up moves, okay? That's why, I mean, it's literally identical. Not the actual percentages, because this is an index, not a crypto, but 4 down moves, 4 up moves. And when you look at the Russell, I have the 45s from the pandemic low, the 45 from the all-time high. You are trading in a triangle. You see this? So you're trading in a triangle. And of course, the bull moves have been plus 13% on the up moves. The bear moves have been about 16.84%. This is now over 13%. So this is long in the tooth. But just like the S&P, it's not quite where I want it to be yet. We'll see if it can pump up to it, but it's not quite to the 1618, which is at 1997. You're trading at 1916 right now. The futures markets will open. You have your 45 right here. Let's see what our long-term moving averages are here. Let's get our 50, because that's a good retracement point, which is right about the 618 at 1776. So that's a good retracement point, but let's see where the 233 is. And let's see where our 150 is. You're on the 150. So your 150, 233, and your 200 is going to be right here on the 45. This quadrant, if it does pump up here, peak resistance with the 1618 at 1997, 233, 150. But again, this could just start rolling over, okay? This could roll over. If the NASDAQ starts to fall, I mean, I would expect the other markets to look to potentially start reversing, because they are at resistance. They're just not at peak resistance. The NASDAQ, I would say, is 2/3 of the way into peak resistance. It's already impacting its 150, and it's at the 1618, or $75 short of the 1618. But you know how these work. You can always get some wicks up before you get a rollover. So interesting to see what happens on Monday when these markets open in full. Guys, let me flip over since we're going long anyways. Let's look at oil really quickly. Oil is bearish on the daily, and the money flow fell through your support cloud. Oil has some low volume, bearish volume. Let's get rid of that. Now looking at this, guys, I know lots of squiggly lines here. Here's your 150, the hot pink. Neon green is your 300-day moving average. Now, again, like I said the other day, this is a very bearish trend. Oil is a cyclical indicator. Again, cyclical indicator showing front-running a recession. That's what oil does. That's what commodities do. They front-run recessions, because in a recession, the economy contracts, okay? You need less energy. Now, the problem is, especially in current state, is what? We have a limited supply of energy, and we have a war going on in Europe. So you have to throw all these variables into the bag and shake it up. Does that come out bullish or bearish? I don't know. I'm not in a trade right now on oil. I love trading oil. We have guys in trades on oil because it did bounce here right off the 300, but you're below your 45. Again, you could make some good pocket change here trading this on Simple if this does start moving up, but I want to see this come back up above this whole 55, which is basically re-entering Wyckoff above 93. If you lose this 300, I'm worried, okay? If you lose that 300, because the one fib's down at 80 bucks. So if you lose that 300, start hitting your head on the 45, you could come down. But again, oil's so hyper volatile, just like a crypto in a lot of ways. This could easily pop up and be a very nice trade for everybody. But the marketplace right now, again, front running a recession, but you have the supply constraints. So it's a lot to keep up with. There's professional traders. I used to just trade oil. I just traded energy. There's professional traders that there's so many variables to the commodities. A lot of people, you really got to understand the macro and the micro. Or you could just say, I just trade the charts. That's fine too. Whatever works for you, whatever gives you your edge. But I found the most success understanding world events, what's happening, and looking at the charts. So, but that's just me. Guys, I hope you have a fantastic Sunday. Definitely be safe, have fun. What time is it? Is it like noon, 1 o'clock? I think I got to get out and do something here in the sun before the sun goes away. We got a shower. But another video coming tomorrow, guys. Take care, everybody.